Well, hello, folks. Was quite an eventful day today, and over here we have the Nas 100. This daily chart, and so far the overall market trend is bullish, and even if we've been having this, yesterday we had this drop down, today we're also having that drop down. Price is dropping down into this daily buy side imbalance, sell side inefficiency right here. I'm going to put lipstick on that so you can see it, some form of visual aid. So we have this inefficiency where price has been dropping down into here, and I'm just going to mark out my key areas of interest for the week. This is kind of like something I'm looking at for the week. So the overall sentiment of the market is bullish, right? And I made mention to you guys yesterday that because of that, I would rather be looking for longs. I would rather be looking for ways into getting into the market for buying opportunity than actually selling, because that's what I'll trust more, and that's what I feel like I'll be more comfortable in trading. So we have this daily BC here, and I'm just going to note that right now as a daily BC. And I'm going to drop down into a 15-minute chart. So just a very, very quick review on what transpired today on the Nasdaq using our understanding of price. So there's buy side liquidity resting here. So first thing we always do is we try to know where is the midnight opening price. So the midnight opening price is right here at this 12 a.m. candle, and that would be at 22,175.1. So that's our midnight opening price. And I'm just going to make that a bit less visible, but still visible to the eyes if you look well enough. It's just an area where we just need to be aware of, because I always say that the best buys occur above, sorry, the best sales occur above the midnight opening price, and the best buys occur below the midnight opening price. So these are 15-minute charts. Here's our midnight opening price right here. That's the price at which Nas 100 opened at the beginning of today. So we have that, and we had some. I want you guys to look at this low right here. That's sell side liquidity, and that was the draw on liquidity for price today. That was where price was running to or drawing to today during the AM session. So that's sell side liquidity. I just hope that this woman's voice is not sounding in this recording. But that's it. That's just how it is. So this is yesterday's 9:30 low. So here we had one of the things you need to also know or bear in mind is whenever you have, let's like watch here for instance. One of the highest high probability draws on liquidity, both for sell side and buy side. So look at this low. I want you to look at this as I'm trying to be very, very practical here. So this is left. And this is your right. So high probability draw on liquidity is when you have the low. This is the low by the left. This is the low by the left. When the low by the left is lower than the low by the right, so the low by the right has to be slightly closely it has to be in like very, very close area where this low is. So the one on the right is slightly higher than the one on the left, so meaning they are in very close. Look at how close they are. Look how close they are. We from here to here, that's how close they are. So whenever you see relative, they are referred to as relative equal lows, right? They are referred to as relative equal lows, and they are high probability lows. That's also the same thing I saw here. You see, this is the one by the right, and it's slightly lower than the one by the left. So the gap between there and that low, this is it. So these are very, very high probability draws on liquidity. So this is for sell side, and the one I showed you up there was for buy side liquidity. So relative equal lows, when you see a low and the subsequent lows that follows it are very, very close to that low, but they are not taking it, they are just forming smoothly. That's what we refer to as smooth edges, and they are very, very, very good areas where the market can run for. So we had the 9:30 open, and before I go to that 9:30, we need to also bear in mind our closing price from yesterday at 16.14, because these are like the normal rules of engagement I use on a daily basis. And I believe that if you want to just get to understand it faster, you want to get to understand it well, it's by picking one particular thing and just sticking to it. So that's the opening range gap. That's the opening range gap. I don't know whether it's a low or high. So let's go to 9:30. That's the close of that's close of 16.14, where we closed yesterday. So 9:30. So you're always waiting for that 9:30 open to get. So now we have this as the opening range high, because 930 is closing lower at a lower price from where it is opening at a lower price from when it closed yesterday. So 930, I have 930 opening price right here, and that's the opening range gap low. If you can make this a ritual of going to go and look for every day on your charts, it's going to better your understanding of price, and you would see something that is into the chart and it always repeats itself. So at 930 thought I had this. So at 930 we have this 830 price here. Over here is the opening range gaps high and the opening range gap low here. Then you can see that we ran for buy side liquidity here. So I made mention of there are times that, because we said the best sales occur above the midnight opening price and the best buys occur below the midnight opening price. So some of you want to be like, but we are very, 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 very much below the midnight opening price and price is still selling. Whenever you have such condition whereby price has gone so far from the midnight opening price, that 830 opening price can also be, or you should also treat that level as well as the same way you treat the midnight opening price, because there are times that price is going to go so far from that midnight opening price. What is now going to make use of, or what is now going to make reference with is that 8:30 a.m. and you need to also see a run on, that's if we are bearish, you need to see a run on liquidity above the midnight opening price. But because this is not the same way you are using, it's just like yam and pounded yam. It's still yam, right? It's still yam. But this time around, we are above this particular one, which we should also consider for that same theory of, you want to see a run. If you are bearish, you want to see a run on buy side liquidity. You want to see a run on buy side liquidity above the 8:30 opening price, and let me write this: whenever you are bearish, you want to see a run on buy side liquidity above the 8 midnight opening price or and the 8:30 a.m. So either of them, the best of the best. The best of the best is when you are above them and there is a run on buy side at both of them together. That's like the best. Just say for instance, this is the midnight opening price here. Takes for instance, this is the opening range gap low here, but let's take for instance, this is the midnight opening price and this is the 8:30 opening price. The best of the best is when you see price like this go over buy side liquidity just like it did here. And as you can see, this is a short-term run on stops. This is a short-term high here. We have this high here slightly lower than this high. So this high is slightly higher than this high. This high is slightly lower than this high. At 9:30, we had the market open up, runs for buy stops. Where is our first presentation fair value gap? The first presentation fair value gap is always the fair value gap that forms after 9:30. So it could be 9:31, 9:32, anyone. It doesn't matter. So we have the first presentation fair value gap at 9:30 a.m. New York. Eastern time. So we had the market run up to take out this buy side liquidity here. Then we had this displacement down into the first presentation fair value gap, and we also it closed outside. This candle that traded into it is closing outside the first presentation fair value gap. And what is that candle? This is the next candle that formed to it. What's that candle over there? Because we have a black man here. No, sorry. We have a black candle here. We have a black candle here. We have a green candle here. We have a black candle. We have a black candle. We have a black candle. So who is the unique person here? Or what's the most unique candle here? If you look closely, this candle right here. So among series of down close candles, up close candles are treated as bearish order blocks, and another block is the change in the state of delivery. Change in the state of delivery. Price has two states of delivery. It has the buy delivery, delivers, that's buy by buying, or it delivers by selling. So the fact that price now note what I'm saying very, very carefully. The fact that price now is failing or is violating a PD array as important as this first presentation fair value gap. Price is violating it, closing outside it, then it has now another block being formed. This other block is being formed as soon as this candle is breaking below, the next candle is breaking below the opening price of the other block. So as it is now like this, as this candle is here like this, let's assume we are just looking at price as it's printing. So as this particular candle at 940 is not yet an order block. It's an order block when the next candle like this is closing, is trading and closing below the opening price of this candle. So once it closes like this, then this becomes another block. So now I can now start looking for the next candles that are going to form, to use this level here now as resistance to go lower. So it is changing the state of delivery from buy side to now sell side. So the market will begin to look for sell side liquidity, start looking for lower prices. And another block has three specific areas that are sensitive, or it has three key levels. Another block has three key levels. The midpoint, if you want to get the midpoint, you measure the bodies. The mean threshold. So over here is the mean threshold of the order block, of the bearish order block. And we have the high. So this is the mean threshold of the order block. That's the mean threshold of the order block. That's the opening price. And that's the low. So for bullish order blocks, it's the high, opening price and mean threshold. But for bearish order block, it's the low, opening price and the mean threshold. Those are the key levels of order blocks. So price shouldn't be going above this swing high over here. So the fact that we don't want to see price go above this swing high over here as well, we also want price to now respect this first presentation fair value gap as what? As an inversion fair value gap. So we are expecting it, we are anticipating that this should act as an inversion fair value gap. So instead of it to support price going higher, it should now be reversed to do what? Send price lower. So we have this other block here, we have the mean threshold, and we have what? The consequent encroachment of the first presentation fair value gap, which we do not want to see price start closing bodies above if it's really bearish and it wants to keep going lower. These are some of the things you need to get used to really seeing and studying on your own. Taking notes, screenshots, looking for them in your chart before they can really make some sense to you, and a lot of sense to you. So this whole area would be area where you'll be looking for your sell opportunity. Anything outside of this, from this high to this, it's better you just let it go, or if you know what you are doing, if you are very experienced, you can still get into a trade even when the trade has started. So what are we always waiting for? We're waiting for that 950 macro, which is from 950 to 1010. So that 930, you want to sit and wait for that 950 to happen before you start thinking of having an entry. You need to wait until 950, because I say 950 because yes, the trade started from all the way from 936, but it became much more high probability with more conviction that yes, it really wants to go down. That's why it's always advisable to wait for the 950 macro to 1010. So at 950, we are running up into this first presentation fair value gap, the mean threshold. Okay, we didn't make it to the mean threshold of the other block, but we made it to the opening price of the other block and the low as well. At what time? At 953, 954, 955, and 956. That's like 4 minutes to get into this trade. Then we had this drop, and notice where it stops at exactly 9:10. We had another gap here, so we had another block here. So if you extend that, this candle is closing below this candle's opening price. So with this extending that, this big drop down, and if you look further behind, you would see that we had more draw on liquidity here, or more sell side liquidity. Notice how that low is. So that was pretty much it for the AM session today. So I hope you found this one insightful. That was a quick review of the whole business for today. So far we've just been, look at how that high is. So there's definitely a high probability that they're going to come for this high, for this buy side liquidity here. So I hope you guys found this insightful. Have a good night.